Hello, this is Mike Swanson. I run the website WallStreetWindow.com. And the stock market's down today. The price of gold is down today too. We saw the market rally for 4 days, and then all of a sudden, horrible gap down. And we had a disappointing CPI report. People were predicting that this report would help the market, and it's done completely the opposite. People were saying that the report would show that inflation's going away, but the report has shown the exact opposite. And now the odds of further interest rate hikes have simply increased. The Fed fund futures market is basically pricing now in 100% chance of a 75 rate hike in the next meeting, and possibly one in the meeting after that, and rates to likely go over 4% now. All the talk of a Fed pivot that you heard proved to be wrong. But let me show you what's going on in the market. And I want to talk about the price of gold too. And when I think the declines in the price of gold are likely to come to an end. But here is just a quick story I want to show you, because that's a good chart about the CPI report. And the report, this is what we're looking at. Inflation has exploded, and it made it a new high in June, and then in July there was a smaller increase, and people got all excited about that, and they thought, "Whoa, inflation has peaked." And then the price of oil declined, the price of gas declined in August, and that brought hopes that this report could show a huge drop off in inflation. In fact, on the CNBC website, before the report came out, I saw a headline. I don't remember the person's name, but some stock market analyst that they were using in the headline, claiming the stock market is just poised to break out and explode as inflation goes away. And now the report comes out showing that inflation is really systemic, and it's bigger than simply what is going on with the price of energy. In fact, here's the deal. Inflation, core inflation went up 0.6 last month, double the pace of July, and it's up 6.3% annualized compared to the 5.9 increase in July. So inflation went up, excluding food and energy. That's what core inflation means. So rents went up, everything else you buy went up. And it shows this is a tougher, more systemic situation. It's going to take time for it to go away. And that's why the stock market is taking a hit. Now, if we look at the S&P 500, as I've been saying in the past, for the past several weeks, all we did in June, July, August was rally up to the 2-day moving average, and that rally stalled out. That's the green line on the chart. That's important because that moving average acts as resistance in bear markets, and it did it. And then we pulled back pretty sharply, almost straight down to 3,900. And the market, although I don't have the indicators on this chart, various indicators such as the daily stochastics got oversold, but there was no fear in the market. The VIX never went above 30. In fact, ancillary evidence suggests that people were chasing, trying to continue to buy. Fidelity was showing that the order flow of stocks, buy orders into meme stocks, really continued. I know I watched a presentation this morning of a company that does marketing of trading services and helps people put these ads you see on YouTube and all over the internet. And they were saying that the rate of buying, the conversion rate in trading services collapsed in May, and then in August it exploded back up. The interest in people buying these things jumped to levels not seen since the fourth quarter and first quarter of this year. And the number one thing people are buying was crypto. So it's just a sign that, and he was saying that marketing packages where they're trying to sell you fear and crashes, the interest in that collapsed. So, so that's the mentality that people have in the market that are actively engaged in it. Most people are just holding and hoping and not paying attention anymore. But the active trader trying to gamble in these markets is still thinking and looking for bull runs, meme stocks, and all that. Despite the fact that we're in a bear market, and today's action was another bear trap sprung on the bulls. And I'm going to say what I think the smart way to make money from this is in a moment. But if you watch the video I did yesterday before today's dump, I looked inside the stock market. I looked to see what the sectors were doing, what was going on with the stocks inside the S&P 500 to see if there's new leadership in the market. Because if the move was real, there would be new leadership. There'd be stocks breaking out of solid bases. I can only find a couple stocks, like four, that had constructive patterns that were up a whole lot in the past couple of days. And most stocks that were leading the rally were just stocks that have been falling all year and underperforming and just having short squeezes. And that's, so I was saying, be careful. And today you see what happens. Now, the other thing I mentioned in the video was that bonds were not confirming the rally. And you can see that with the TLT ETF today making a new 52-week low, but more significant, the past couple of days, while the S&P was rallying, the NASDAQ actually lagged the rally, which was a big warning sign. And now the NASDAQ's down worse than the S&P 500, but bonds did not confirm the rally. And that's, and the bonds are really what's leading the stock market. Bonds peaked out before the stock market averages did. Bonds went into a bear market before the stock market averages did. Bonds are leading the market lower. That's why everyone who does want to be bullish in the market keeps obsessing the idea of Fed pivots, inflation going away, because they want the interest rates to stop going up or even go down so the bonds can rally. But it's just hope. There's nothing in the charts that's ever confirmed that hope. There's nothing in the economic data to suggest it. All they saw was a slowdown in inflation in July and got all excited and then made these crazy predictions. They ignored the trends on the charts. That's what we have to guide our real decisions by. So look, people want to tell you that making money in this sort of market is easy. They want to sell you trading systems. They want to sell you on stock picks or crypto coins that they're doing. But in a market like this, it's not easy. And there's nothing better to generate wealth than the stock market. But when you're in a bear market like this, it's very difficult and it's easy to lose money. And you get tricked and trapped by bear market rally traps, as you just saw Sprung. The smartest thing to do, the best thing to do in this market is to take steps to diminish the volatility in your portfolio. In other words, make the swings that your portfolio is making as a result of market conditions small. You can do that by hedging long positions through puts, short ETFs, and I should say, you can do it by having cash reserves and that's not a lost opportunity. When you have cash in your account, and what that does is gives you the ability to be a buyer when the bear market is over. And that, I believe, is the most important thing to be in a position to be able to do. And that's where the true fortunes will be made out of this mess. It's not from day trading. It's not from meme stocks. In fact, the people heavily engaged in that sort of stuff are going to be people unlikely to be buying when this is and able to hold when this is all over, which is where the real money is made. So a lot of noise is tricking people and trapping people, and this is what's happening now. Gold also took a hit today. The price of gold basically went to 1,700 after the news. It's trying to bounce off of that level a little bit. I mean, this is the GLD ETF, which tracks the price of gold. But gold did great in the first quarter and then peaked in March, and since then has been in a slow decline. And gold is being impacted now by rising interest rates, the rising dollar. Gold has been falling with the stock market and going up with the stock market since May, let's say. Now, at some point, that's going to change. And that's why I still believe gold has a role in people's portfolio as a substitute for bonds and what we're now in a very long-term cycle, much different than what was going on from 2008 to last year. That cycle's over. We're in a new cycle. But I'm not going to tell you right now that you can buy gold or mining stocks and you're going to get rich quick in the next month. Instead, you may see them go down a little bit. But there's going to be a time when gold disconnects from the stock market and breaks away from it and goes up to the upside. That's probably going to be towards the end of this rate hiking cycle, which isn't next week or next month or in December probably. It's probably early next year. But this is what I'm going to be watching for when it comes to gold. Look at the indicator on the bottom of this chart. That is the GLD divided by SPY relative strength ratio. When that ratio goes up, it means gold's outperforming the stock market. That ratio is actually on a very slight incline year to date. So gold, even though it's been falling since March, is still outperforming the stock market year to date. And if we look at this indicator from just August to now, when the most recent pull drop off of the 200-day moving average on the S&P began, gold is actually outperforming the S&P 500 over the past couple of weeks. That's a positive sign. What I think we're heading for when it comes to gold is a continual soft decline in gold prices, in which gold is likely to make a decline below 1,700 before the end of the year, but fall less than the S&P 500, fall less than the NASDAQ, fall less than the Dow, and display powerful relative strength. That trend will set the stage for gold breaking away from the stock market and exploding in value. I think gold's going to do great once that starts, and gold will become one of the big stories again for 2023 and perhaps the years beyond that, because we're in a systemic inflationary trend. And when interest rate hikes stop, the people are going to rotate money into gold. So here we look at this. This is the CRB, Commodity Research Bureau Index, compared to the S&P 500. That made a bottom in 2020 and has been in a secular uptrend, although it is pulling back since March. So let me put it to you this way. Gold, commodities, energy prices are in secular bull markets. Secular bull markets are markets that last for 10 years. Within them are cyclical bear markets. We're having a short-term cyclical pullback in the commodity complex, which, when it's over, will lead to a great buying opportunity for gold, silver, commodities across the board, commodity-related stocks. So I think that's what we're headed for, a great investing buy point in those. And if your choice is between trading meme stocks, being a herd trader on Robinhood and message boards, or being patient and waiting for a time to buy energy stocks, mining stocks, commodities, I would say do the latter, ignore the noise, because if you get in the right buy point and are patient for it, you can get huge dividends and buy stuff that will go up just as much as you think the meme stocks will go up. Meme stocks are losing stock situations. They go up for a couple of days, then top out and dump. I know it's what everyone wants to do. It's what you hear all the videos about elsewhere, but I'm telling you, you don't have to trade today. Everyone wants you to. That's how Robinhood makes money. The more they make you trade, the more money they make. Well, they're not going to tell you stop trading right now. I will tell you that because I want you to have long-term success in these markets. So that's my take on today's market action and what you should take away from it. What matters, not just today, but for the next couple months. I don't want you to be successful trading today, but I want you to be successful trading tomorrow, the week after that, the month after that, the year after that, not just for a few minutes. And that's what building wealth is about. If you want more, look, I do videos about the economy, the Federal Reserve, history, news, real estate, all sorts of stuff. If you want more videos from me about market trading, market action, hit like. If you're new to me on YouTube, hit the subscribe button, hit the bell next to that, and then YouTube will send you a video update as soon as, or an alert, as soon as my next video is up. And I'll be talking